You are listening to chartingwealth.com for Thursday, the 13th of September, 2018. We see stocks mixed for the day, bonds and gold up. Let's jump into the S&P 500 that was up just barely for the day, 0.02%. What do we see going on? Well, we've switched from a red open box candle to a green spinning top, which again portends indecision but tending up. And again, we have 2 more days, full days of movement before we call it. But what we see going on is the price percent oscillators barely heading up, derivative oscillator losing energy. What we really see happening is a sideways slide. We'll see just how the week continues to progress. But again, we're in a confirmed up move on the weekly chart. We go from the weekly to the 2-day. And of course, we see that we are entering to the first day of this latest candle is a green spinning top on the 2-day also. That's an open box. The one prior was a solid green candle. So again, a little less definitive in that indecision. But we had a 2-day vertical crossover going down back on the 2-day candle ending on Friday the 7th. So what we've really seen so far is sort of a sideways slide, tending up at this point. But that 2-day chart's still in a confirmed down move, so that means we don't have the potential for a setup coming anytime really close, most likely. And the 4-hour chart is still in a confirmed down move also, just like the 2-day. Although we do see that the derivative oscillators flipped over to the positive, price percent oscillator still in the negative, and of course spinning top red one in the morning and then a green one in the afternoon, like we said, just barely up 0.02%. That's what we see on our Heiken Ashi candlesticks as far as that price movement goes. So we'll continue to keep our eye on things. Don't have anything yet. We're going to let the S&P shake out. Remember, we're trend followers. Once a trend is established on the weekly, then the 2 days moving in the same direction. After we see a pullback on that 4-hour chart, we then jump in when it turns around and moves in the same direction as the 2 bigger charts. Why don't we do that? Because it seems to work time and time again. Not always, but a heck a lot of the time. And that's why we practice to make sure that we understand the charts in those times when it's not going to work. We don't lose money. Now, again, we're not a stock calling service. We're an education firm. We want you to practice with us. That's what we are trying to get you to do. We're not giving you trades. That's not what we do here. Okay, let's go on to the Qs. That's the NASDAQ 100, the tech stocks. Now, on that weekly chart, much more decidedly down for the day 0.29%. And we see price movement pushing through the weekly trend line, and it looks like that weekly's trying to cross over. Haven't seen the derivative oscillator flip yet, but we see the price percent oscillator trying to push through still. 2 more days of movement, so we don't call a candle until it's done. And of course, what's going on that 2-day chart? Well, of course, it crossed over going down back on the 7th. That was Friday, this past Friday. 2 green candles since then, but again, we're seeing down movement. Derivative oscillators gaining downward momentum. It's negative. Price percent oscillators also heading down. Price movement sitting right there on that weekly trend line. This is just the first day of that latest 2-day candle. What's up on the 4-hour chart? Well, we saw where it popped up on the 11th. That was on Tuesday. And then down in the morning, up a little bit in the afternoon. But for the day, down 0.29%. Price percent oscillator still negative. Derivative oscillators already flipped over going up. So again, we'll just wait and see what we see as these things continue to move. And if we do have a weekly vertical crossover going down on the Qs at the end of the week, we'll let you know. And everybody who signed up for the texting service, you'll get a text telling you just about that. And don't forget, our second method of entering trades is when there's a weekly vertical crossover, we look and see if the market is moving in that same direction at 10:30 the following Monday after we call it on a Friday on the weekly candle. And then we look to jump into that trade and ride it down. Okay, going to go from our stocks back to our weekly chart and move on to TLT 20-year bonds. What do we see going on there? We've got a big red candle on that weekly chart. Looks like we're going to, very much looks like we're going to have a crossover going down. And again, it's been a while since we've had a weekly vertical crossover on any of our charts. Looks like we're going to see that happening again on TLT. We're not going to call it till it occurs, but the derivative oscillator gaining momentum, price percent oscillator heading down. On the 2-day chart, what do we see? Well, this first day of this latest 2-day candle appears to be up, pushing through just barely that 2-day trend line that was established quite nicely with the last 6 days of movement before this present one. We see that the derivative oscillator, however, still gaining downward momentum. Price percent oscillator heading down, not quite as fast as it had been before, but we will continue to watch things there. And then what do we see on the 4-hour chart? Really sort of a sideways slide since the afternoon on Tuesday. We'll continue to keep our eye on things and see if we have that 4-hour chart crossover going up. But again, until we get some things to shake out, and we may very well by the end of the week, we won't have any potential trade until this next week, and maybe on Monday. We'll keep our eye on things, see how it all shakes out with a potential weekly vertical crossover going down. Lastly, we go to gold. Gold was up big time, 0.84% for the day. Now again, that's compared to everything else, and gold up the most with our stocks being mixed, and of course 20-year bonds up 0.24%. So what do we see as far as the candles go? A sideways slide on gold underway. Now it looks like we're forming a doji here, which means even more indecision. After a week of downward movement, perhaps gold is going to find a bottom. Derivative oscillator continuing to lose downward momentum. Price percent oscillator headed up, but doesn't look like it will probably cross this week unless 2 more big days of gold happen. We see on the 2-day chart, again, it crossed over going up back on Friday the 24th of August, up for another 2 days and then sort of sideways and down. It looks like it's trying to start pushing up again. Derivative oscillators flat, which is a good sign, not going down at this point. Price percent oscillator heading up quite markedly. So we'll keep our eye on things and just see how gold actually, just sort of how it settles out. But again, it's interesting to watch, and we'll just see what we see as gold continues to move through it, and we'll see how things rack up, and if gold's found a bottom and might start to go up again. That would be nice. We love trades. That's where we are, folks, as we end the day on Wednesday and go into Thursday the 13th. You have questions, problems, concerns, let us hear from you. chartingwealth1@gmail.com. And of course, order our book. We always appreciate folks who help us with that. And of course, we offer a lot of special training to our book purchasers. That last one was the short chart training. Love to hear back from you guys that have received it, what you think about it. All the best, my friends, from the whole team here at Charting Wealth World Headquarters.